Hello guys, welcome back to the next learning video. So now coming to a very important topic. Okay, uh, most of the traders would want to learn the art of taking maximum profits in one trade, right? That's what swing trading is all about. But what happens in reality? We see most of the traders, okay, maybe 90% traders take very small profits after entering trade and exit. When trade is going right, they take very small profits. The moment they see small profits on screen, they exit the trade. But in trades which does not perform and starts going into loss, they wait for big losses. Okay, small losses they will be unable to cut, and they wait for losses to mount, keep increasing more and more and more, and finally once they are unable to bear the magnitude and value of loss, with unable to bear the pressure, they cut. Then they take decision to cut the position and eventually end up with big losses. Okay, so this is the reality with most of the traders. How you can address this issue, how you can reverse this? It has to be a reverse mechanism, right? Loss has to be small, profits has to be big. So how can you do that? Trade which is going right for you, how to make sure, or what is the conviction you need to build to hold the position for bigger profits is what you have to learn. Okay, so that can definitely be implemented effectively in your regular trading with a basic approach. Okay, with a very effective basic approach by focusing on the lows getting shifted on day charts when you look for swing trading. Okay, again, let me take few of our trades and explain you one after another and help you understand the importance of holding the trades which is going right for bigger profits. How do we do that? And what are the uh, concepts we need to understand to hold the winning trades for bigger profit, and where exactly can we be looking to book our positions? Let me take a simpler chart to start my explanation. Okay. Okay. So this is a chart of Cholafin in which we have taken a buy trade recently and booked good profits. Okay. Now have a careful look at what I'm going to explain you. Let me remove this. Okay. Now there are two factors which I'm going to tell you. Okay, there are two factors which I'm going to tell you. Please pay attention. One is the identification of trade. Cholafin we saw had given a good up move of around 8% from this level. So we marked it as a memory zone to take a buy trade. Okay, so in next few days, in around about a week's time, once price slowly dipped back to these levels, we saw a reversal candlestick from the same support zone and we entered a buy trade and the trade performed well. So now I'm showing you the trade which has performed. While It is in the course of performing. Okay, when the trade is active, when you have taken a position and when a trade is active, how do we decide? Should we hold for bigger profit or should we book profits and exit? And where exactly do we book profit is the question. Guys, for that, one simple approach what you need to start having is focus on day candlestick low points on a chart. Okay, start focusing on low points of a chart. So I'm just marking the lows for you to start understanding it in a better way. See, now on this candle, this is the candle low. What about next candle? What is next candle low? Next day candle low is here, right? And next, the day after, next candle low is here. And again, the next candle low is here. And next candle low is here. You see my point? I'm just marking the low points on a day candlestick. The body low, not the wick low. The body of a candlestick, low points is what I've marked on the charts. And now you can understand by my markings that with every passing day, okay, this is day one of a green candle. This is day two, low point of a body of candlestick. This is day three, low of body of this candlestick. Day four, low of body of candlestick. And day five, low of body of candlestick. You can see the lows have started shifting higher and higher with every passing day. The lows are just getting shifted higher. This is what you need to understand for holding a trade. If you take a trade on day one, next day the lows have got shifted after day closing. Yes, which means the stock is giving indication that probably the price is going to move much higher the next day. You can hold your position for next day. This is the first indication what you get. Okay, and the next day again the lows have got shifted higher. So probably again it's giving indication that there's a high probability that next day the price can shift again higher. The price can give an up move. Okay, 4 days the lows have got shifted higher. Now what? See here, fifth day also the low has got shifted higher. Okay, but there's a difference here. There's a difference. You see every passing day, first day was a medium strength green candle. Second day was a better formation of candle because the body is bigger, right? This is how this journey of stock trend changes. See, previous it was in a small sell trend, reversed. This is a reversal candle. Next day, a good bullish confirmation. We have taken buy above this. Good bullish candle. And next day, again, a good bullish candle. You can see the strength of candlestick. Means what I'm telling, body of candlestick is strong. Here also body is strong. All these four candles are good. One is a reversal candle, three good green bullish candles. What about this candle? Here you see wick on the higher side. Here you see bigger wicks on the higher side and body is very small, which means it is giving signs that I may stop moving now. This candle is a sign that the price may stop moving upside. Higher chances because two things. One is the candlestick pattern. One is the level. See, we have entered buy because of the buy memory, right? This buy is here. So we again identified for buy and we took this buy. Now we can hold it only if these levels are broken and moves up. Then it will give more higher movement. It will give lifetime high, fresh lifetime high. But there is a probability. It has to break these levels to move, or else again it will reverse from this level. And how do you determine that? Just by watching the price action of the candlestick. So price action of the candlestick plus levels. These are the two factors. I have told you in my previous video also, price action of a candlestick, okay, plus levels. These are the two factors which we combine to make a decision to hold or to book out from the trade, right? But when I talk about this trade, this small movement also fetches a profit of 60-70,000 rupees. In this moment also, one future trader will get a profit, tends to earn this much of profits in one future trade. Okay, so that's how you start understanding, analyzing to hold the trade for bigger profits. Every passing day, low has to start shifting higher to hold for bigger profit. And then, see, this is one point. You need to make a decision to hold your trade for next day to capture bigger profits. And you should also be able to book profits at a good up move. Now here you see a previous level. This becomes automatically a resistance level for us to book profit. So one is VC level, one more VC for a bigger. Whenever the stock moves up in the final movement, okay, in the final movement where the stock will stop moving, it will give a big exhaustive move. It will give a big explosive move during its end stage. That is where we will be planning to book profits. So that again comes down to price action. So price action of the candle plus levels. This is what we will see and hold the trade for bigger profits. This is a basic approach, very, very effective. You start following these concepts and you see the difference in your trading style henceforth. You will see a difference in your trading style if you follow these methods consistently. I'm again repeating, these teachings are not just to watch once and forget. You need to first watch, understand, observe the markets for a few weeks, again visit these videos back, again make your notes. Every time probably you watch the video, a fresh understanding perspective will come into your mindset, which you need to make notes and keep improvising your understanding ability and implementation of trading style in markets. Okay, see Syngene. This is also a very good example. This was the first day when we entered buy in live market. Okay, in our trade we have entered buy, and after closing of the day it gave a strong bullish closing. Again, how to determine strength? You see 80% and above of the candle should cover the body of the candle should be above 80%. That will give a primary indication that yes, stock has a strength on buy side. So probably you can afford to carry it for one more day. You can take a small risk and carry it for next day. Next day, you see again a very good bullish up move. See the strength of the candle. Again here above 80%. One more day, bigger candle, low has got shifted. See the points. You have to combine all these factors I'm telling you. It's not sufficient to know only one point. You have to, whatever concepts I teach, you have to integrate and combine all the concepts. Now start marking your lows. Start watching what is happening to the stock. Okay, you can also shift your trailing stop loss. See, day 1 low, day 2 low, day 3 low has got shifted higher. Also, you see the candle size has started becoming bigger, becomes more bigger. So as the price moves, as the range of this candle moves, you will probably reach a profit booking zone or an area of profit booking. See, the final candles of any trend will give an explosive move like this. These are the explosive candles toward the end of a rally. If these explosive candle comes at almost fag end of the rally, they will in all likelihood be the exhaustion candles. Okay, the speed of the price movement in all likelihood tends to get exhausted. Means a running race will start here. It has delivered quick, fast, and the speed will get exhausted. It will stop here. It will take a pause. After this move has come, it will take a pause. It will not keep running unlimited. When explosive candles start coming, it will not continue to run unlimited. When explosive candles, which means a big size day candles, start coming towards an end of a trend after the big trend. Okay, this is a big trend, right? You see the average size of candlestick in last trading sessions, few weeks trading session. You will understand that these are huge candles compared to the average size of candle in last few weeks of trading session. These are very huge candles, and when such trend comes in any stock toward the higher end or toward the fag end of a rally, whenever you see explosive candles, these are in all likelihood to be the exhaustive candles. This the movement, this price action gets exhausted and stock will take a pause. Whenever you get such a explosive candles, you can book your profits and exit. So this is the combination what you will be using in your trades. So you see, after this, there's nothing. After these explosive candles, there's nothing. Price is just hovering up and down. There's no trading opportunity here for swing traders. Yes, intraday traders can learn. I mean, you can learn, practice, learn advanced methods of intraday trading and keep trading here. That's different. But for swing traders, there's no opportunity in such locations. Only opportunity came here. It gave a good rally, delivered massive profits, got exhausted, and now stock is taking rest. After some time, stock will decide whether again it has to give a fresh breakout and it wants to move upside, or again it wants to go down, break below this range. It wants to break the range and again go down and retest these levels. So there are always two possibilities. After a long period of consolidation or a pause, there are two possibilities. Stock can again start running up, or it can come down, retest these levels, and then start again a fresh journey for upside movement. But now point of discussion is to watch for the lows getting shifted and to watch for exhaustion candles for profit booking. Okay, let me show you one more trade, one more beautiful trade to understand the concept of the lows getting shifted higher. Okay, so primarily any stock which is in an uptrend, which is about to begin an uptrend, and the lows which we are talking about, okay, are referred to as higher lows. Means the stock is in higher trend, but the point where we are discussing are the low points on a day chart. So in simple language, okay, I'm not going into technicalities of making you understand what is higher high and higher lows, because many people tend to get confused only on this. So all I'm trying to tell you is, in a swing trade for a buy, whenever you see stock in an uptrend, please focus on the lows getting shifted upside on a daily basis. Okay, let me just mark it again for you. You see, this is the low point of one candle. This is another low. This is next day low. This is how you need to mark. On your charts, mark it. I hope you see charts and trade, or else there's no point in discussing any point, any subjects with us. Okay. Yeah, now you see. Now you see and carefully understand what's happening on the chart. This is how you have to start practicing and gain knowledge and confidence with time. Every passing day with us has to be a learning experience for you. Great learning experience. So why we selected this trade? Stock as on a downtrend, showed a reversal sign, right? This is a reversal sign. After a red candle, one green candle has come. Red is bearish, green is bullish. One reversal candle we saw on day chart. We shortlisted for buy. We entered buy above this next day, and just see the journey of stock. Forget about trading, just understand the analysis. First you need to understand, then trading will come. What is happening here? So this here is a low point. Next day what happened? After end of the day, the low has got shifted higher compared to the previous day, right? Next day again the low has got shifted much higher. And you see, that's how it gives you a basic confirmation what could be the possibility for next day. And you see, initially the candles were small. As the price up move has started, bigger candles have started coming. So this candle is bigger than previous day. This candle is much bigger than the previous day. This is an explosive move, right? This candle is an explosive candle compared to last 3 trading sessions. So now you start being alert for further up move and profit booking as the price starts going up. And what happens? See, next day again price moves up. Lows has again got shifted higher. Even here lows are higher, right? But what is the percentage of movement from here to here? Just verify. Around 2,900, right? From here it has given an up move of close to 10%. You should be looking for profit booking. Any trade which gives 8-10% movement, good enough. You enter with a risk of 1%, you exit with a profit of 8%, 10%, good enough. Book your profits and exit. Anywhere in this zone, you'll get enough time to book your profit. You book your profits here, 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 plus or minus 0.5%, 1%, you will be in very good profits. So getting it, guys? Concepts of lows getting shifted higher and higher to hold your swing trades for bigger profits is the funda. This is how you hold your trades for getting bigger profits every passing day. Yeah, any trade doesn't move big, even if it moves medium, we book medium profits and exit. That's okay. All we focus is on risk management. From entry level, we should know what the risk, and we should be very strict in risk management. If I'm taking my buy trade above this, I know my stop loss is below this, right? One candle stop loss on a day chart. So if I'm taking buy above this, I'll keep my stop loss below this. If price comes down and hit my stop loss, I book my loss and exit. 1% stop loss I book, I exit. 1.5%, I mean approximate. Mostly it will be 1%. Okay. Lesser the risk, better it is for us. Manage minimum risk when trades start without hitting stop loss. If trades start running, this is where you need to implement your knowledge that you are learning. First you need to learn, then implement in your trades. Once you're fluent, once you're consistent in your understanding and implementation, encash the knowledge earned with bigger profit by encashing bigger profits in trade which is going right for you. This is what you need to do, and you need to do it very consistent. You need to practice every day, every week, every month on month. For several months you practice. At certain point of time you'll get used to it and become comfortable to implement these concepts in your trades. Okay, now let me come to sell. What about sell trades? Sell trades are also same. We focus on low point of the stocks. Okay, so recently we took an ITC sell trade. So I'm just explaining you the price action of this. We took an ITC sell trade. So this was the entry point for ITC sell. Logic for entry, I'll explain you in some time. Once I come to the moving average concept, I'll explain you and help you understand why we took the sell trade. Now, entry for sell trade was this. Stop loss was just above this. You know, I've already now very specifically told you 1% stop loss. Okay. We took sell trade, and how did the trade progress? Just have a look. And what did we focus, and what gives the conviction for us to hold the trade for bigger profits? Again, start watching the lows. This is one low of a candle, right? Day candle, lower part. This is the low of this candle. This is the low. Again, next day also, same level was the low, right? More or less, it's hardly 1 point. So it'll almost be the same. So lows are at same level. And see here, how beautifully the lows are getting shifted downside. As long as the lows start getting shifted downside in a sell trade, you can hold your trade for bigger and bigger and bigger profits till you book profits at explosive candles or candles at which the price movement is likely to get exhausted. See, at the fag end of the trend comes this big explosive candle. This is also an explosive candle, right? Compared to these candles or compared to other candles in the last few week trading activity, these will be the explosive candles. Just by having a visual understanding, you can have a sense whether it's a medium size or a small or an explosive candles. So whenever you take a sell entry in a sell trade, watch for progress, how the trade progresses. Does the price move up and hit your stop loss, book loss and exit? Or the price is moving in your direction, that is sell, downside, low has got shifted next day. Okay, what does it mean? It means the chances of price falling next day is much higher, right? Lows have got shifted, and here also this is again a bearish candle, not a bullish candle. Bearish candle, opens is equal to high, so trading activity is sell only for the day. For the day it is still in bearish trend. So watch for next day. Yes, next day gives a big explosive move. So for your understanding, the ITC put option, what we had taken at 1 rupee, had become approximately around 7 rupees still here. So it was a 6x multiplier trade. In matter of 1, 2, 3, 4, 5 trading sessions, investment in options multiplied by 6x, 6 times. I invest 10,000, it is multiplied and value became 60,000 in 5 trading sessions. That's the beauty of swing trading. You need to capture one swing, one movement, one trend in a stock has to be captured in the shortest duration. That is what will give you the profits. Bigger profits. I mean, see, I'm not talking about every day entering and capturing small intraday profits of 2,000, 3,000. No, that's not what I'm talking. Swing trading, the concept of swing trading itself is to capture a good trending movement in shortest period of time. If possible, the entire move, or at least 50 to 70% movement. If you capture, the profits also will be massive profits for you. You need to understand that it's not possible always that we capture end to end profits. Every single trade, it's not possible to capture end to end profits. But in a good trending move, even if we capture 50% of the movement, also gives us massive profits. So there's a lot of mental preparation and psychological understanding required in trading. And that's how you need to train yourself. Whatever opportunity we get, we take it. Sometimes we get a big good opportunity end to end based on technical chart analysis and candlestick formation. At some places, proper formations may not happen. So we are not sure at the time of entry, we may forego some profits. But once we get some confirmation candle, then we enter and capture the remaining trend. That is also a good idea. Okay, so capturing 50 to 70% in a trend also is a very, very good idea and skill to develop. You need to make sure the trend has started. Okay, and once you skill yourself to understand these concepts, you will start milking money. Okay, so there is one sell trade. Let me take one more trade and try to explain you the concept. See, guys, so basically, I hope you understood this lows getting shifted lower and lower. Okay, so this is how we need to look for a sell trade. In buy, we do the inverse. We see for lows to get shifted upside. Okay, so on a sell side, on a buy side, both trends we will focus only on the low points of a day candle getting shifted. So again, practice this consistently, practice them, keep practicing them over a period of time, gain mastery, and then implement in your trades. All right. Okay. Now let me go to the concept of moving averages. Okay, the concept of, we are going to have a discussion and learning on the concept of moving averages. So very important moving averages for you to have on your charts will be a 20 period moving average, a 50 period moving average, 100 and 200. These are very powerful, very effective moving averages at which you will get trade opportunities very frequently in markets. So moving averages are technical tools or indicators with the help of which we will identify trades. Often it is seen that the price of a stock tends to hit these moving averages, and these moving averages in turn act as a support or a resistance based on the location of the price for the stocks. Okay, so these moving averages tend to act as a support or a resistance level for various stocks on different days. On some day, one stock may take support at 20 moving average. The same stock on another day may take support at 100 moving average. So on different days, you see the price of the stock taking support at different moving averages and moving up, and the same applies inverse. So in various stocks, you see the price taking resistance at different moving averages on different days. Okay, so we'll discuss one after another and show you a lot of examples to help you understand. This basically, again, we are doing it to help you identify trade levels and be able develop the skill to pick good trades for swing trading. Okay, now let me just enable some moving averages on my chart. Okay, to begin with, I've enabled a 200 period moving average on my chart. Okay, now you see this line, this black line. This is a 200 period moving average. When I enable the indicator of a 200 period moving average, this is what I get on my chart. And if you want this indicator, I'll show you how you can get it. See, just go on your search option of indicator in your trading view, click on these indicators, type SMAs, okay, type SMAS. So in the drop down, you get second option. You can select and click second option. In one indicator itself, you will get 4 options. Means just by selecting one indicator, you can configure 4 moving averages in one indicator on your chart. Okay, so just click this indicator on your chart, and then you can start enabling and using whichever moving average you want, you can enable. Now, to show you an example, I've just enabled to explain, to have enabled 200 period moving average, and this is how it is. So it also moves along with the trend of the price. You can see ITC has been in an uptrend. So this 200 period moving average is also on an uptrend. It is in a rising trend. So we can make technical analysis based on this moving average. What happens? 200 period moving average becomes a very strong level for almost all stocks. Okay. Most of the stocks, I will not say every single stock, but most of the stocks. And some stocks will have a tendency to respect certain moving averages very often, which you can observe and make a list of that and follow the stocks. Now in ITC, what we did, we saw the stock coming on a downtrend, and it broke the level of 200 period moving average here. Okay, it broke and closed the day candle closing below 200 period moving average. We got a closing here. Fine. Now once we get a closing here, this became a resistance, right? The 200 period average became a resistance. After the price broke this level, now this became a resistance level since price is below this. So above this, it will be bullish. The trend below this moving average will be bearish. What we did, we initiated our sell trade here. We initiated our sell trade right below this 200 period moving average. And the result is in front of you. Gone, collapsed. This almost fell 10% and gave us 10% profits in our trade. See, these are simple tools and approach what you can have to identify it. It's very simple. Anyone can do it. But you need to learn, understand the effectiveness of the method, then get into the markets. Okay, let me quickly show you one more trade. Budge Finance, also same logic used. Okay, same logic, ditto, copy paste. We saw the closing below 200 period moving average, gave a day closing, stock retraced, just touch the 200 period moving average. Okay, it took a resistance here. We initiated our sell trade. Next day, it opened a huge gap down and massively it fell. This fall also gave around 10% movement. We just shorted below 200 period moving average and we got this downfall. All right, fine. Let me take some other moving average. I'll take some other trade which will help you understand the effectiveness of this moving average. Let me take an Indigo trade. Indigo, we are taking a buy trade. So now you are seeing 200 period moving average on this chart also, but this we have taken with another moving average. Now I'll enable, let me enable 50 period moving average. Okay, 50 period moving average. Now I've enabled 50 period moving average. Indigo, we saw the stock come down and form a reversal candle right on 50 period moving average. And we initiated our buy trade here and you see the result. boom, 10% up move. Looks simple, right? Just we took an entry on reversal candle on a 50 period moving average. So again, it is, what is the formula? It is level plus candlestick price action. We have blindly not taken buy. After confirmation of a reversal candle, then only we have initiated buy. This is the reversal candle, this green candle. This reversal candle confirmation only gives the conviction to take the buy trade for this up move. So as I said, every stock at one or the other point of time, it tends to come, hit this, take support, and then move. So some stocks will take support at some moving average for a buy trade. Some stock will take a resistance at some moving average for a sell trade. So that's why I've given you very limited moving averages to follow, to be implemented in your trades. Okay, let me show you a few more trades. Biocon. We have taken a buy trade in Biocon. I'll help you understand the logic of the trade also. Now you are seeing two moving averages on my chart, right? One is a 200 period moving average. One is a 50 period moving average. Now I'll enable another two moving averages. That will be 20 and 100. 100 and 20. All right. So this is 20. This is 100. All four moving averages you are seeing on my charts. Now, Biocon buy trade, we took a trade here. In the recent past, we took our buy trade here. Why I took my buy trade is I saw the price hitting 20 moving average and take support from here, and it gave a reversal candle confirmation. Okay, this is a 20 period moving average. So on your chart, when you enable this moving average, you will also see the same line, same level. So I saw it taking support on a 20 period moving average and give a reversal green candle. Next day, I initiated my buy trade. And after my entry into buy trade, price moved up. I entered my buy trade with a small stop loss, price moved up. So it gave a good bullish closing. So as per the lows getting shifted high theory, two lows already got shifted higher and current day candle is green. Next day we carried the position. Next day we got a bigger up move, right? So low is again getting shifted higher. We got a bigger up move. Lows again got shifted higher, and this is an explosive move. Now you can see the movement. Day 1, day 2, day 3, and day 4. So as the price keeps moving higher, once you get this kind of explosive move, watch for booking your profits, plan for booking your profits. At the fag end of a rally, you will get explosive move, which is all likely an indication that up move will get exhausted soon. So they are also termed as exhaustion candles. And you can watch for your profit booking in a good up move. See, you can book here, 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 anywhere. You have ample time to watch and book your profits. 80-90% of your profits is safe. The 10% extra profit what you want to book, do it as per your experience and skills, right? Implementing these concepts at entry level is very important. Then you can ride this based on what I've taught you now. This will give the biggest profits. Guys, understand, the biggest profits for you from trading will be only if you hold your trades for these explosive moves. These explosive moves will give you massive profits, which probably you would have never seen before. Before attending these sessions, if you are not following these concepts, you would have not seen the profits. Okay, once you hold your trade for this explosive move, this is when you see your profits swell. If you're option trader, it will give you, these explosive moves can make your options go 5x, 7x. That's how big profit comes, right? And see, this has given an explosive move. Now what happens? This becomes a origination place for this trade. Have it on your watch list. In coming days, whenever price comes back here, you can probably take a buy trade again, because this will have a buy memory, which I've taught you now. Okay, and you can see the reaction of moving averages also. Once it has come here nearby around 50 moving average, again the price has given an up move. It has come here, this 50 moving average again has acted as support and given up move. So every entry will tend to give you some profits. Okay, but first, most importantly, practice the candlestick patterns, location of the trades, then only start trading by yourself, paper trading, as I've been repeating all through the sessions. Only if you are profitable in your paper trading, then go for real money trading. Okay, so let's do it once more. One more stock. I want you to understand these concepts very, very clearly, crystal clear. Crisp and clear is the word. Okay. Okay, let me just make the charts a little clear for you. Okay. We have taken a trade. This is about Shree Cement swing trade. Shree Cement. Now, just by looking at the chart, now you will be able to tell me that which was a good trend in the recent past. Okay. This was one trade which we had taken. So when you want to identify a trend, of course, it has to be before this, right? Before this, which is the good trend which Shree Cement has given? Very easily you can identify this is one big up move which has come in this stock, right? This one big up move. Of course, from same level, smaller movement have come. But here, what has happened? One very big rally has come. So this is, in all likelihood, this will have a strong memory for buy and it becomes a buy zone. So these are, we mark our memory zones for buy. Once the price reaches the same levels in coming weeks, coming months, we can again look for a buy trade opportunity from the same levels. Okay, mark these zones which has buy memory, which has given a big rally. Whenever the price comes at the same level, mark it at the same level, mark it. Use the indicators, whatever you want, you do it, mark it at the same levels, you mark it and keep it ready. Put your price alerts and keep it ready. When a price comes here, you need to get an alert. You have beautiful alert system in TradingView. Any stock you want, you can check the price on your chart, 26,300. You can mark your alert, Shree Cement, price 26,300. You can put your alert name, okay, buy zone, and create your alert. Even though you're not there watching Shree Cement chart, If price reaches there, it will give an alert pop-up. Guys, you need to start becoming smart in using all this alert system, using this notification system. You have alert system and how you want this alert to come. Even that option you have. You can choose to play the sounds here, right? You will get sound. You can choose to get mail. You can choose to get notification on your mobile app. You can choose to show the alert or get an alert system as a pop-up on your trading screen. You have multiple alert system. People who say, I don't know when the price came and went, you're not involving yourself in serious trading. These are simple methods which you need to learn, adapt, and improvise if you want to be a serious and successful trader. There are a lot of tools and systems available to give you price alerts whenever price reaches certain levels. You need to do your homework. You need to mark your price and take trades basis confirmation. So once price comes here, what we look for confirmation? We look for one green candle, right? First green candle we will be watching. When is the first green candle comes? You can see this is all sell trend. This is a big sell trend. All red candles will indicate sell activity. So when you mark for a buy zone, what do you want? You want the price to reach here. After price reaches here, you want one good green candle to come on a day chart. So this is a very good green candle. See, with long wicks at the bottom, with good body on the top, it's a good bullish candle. It qualifies to being called as a bullish reversal candle. So you can take your buy trade about this. Since it has given a big rally, all probability the trade has highest chances of performing. We entered buy above this and captured this big moment, very big moment. This is how we identify trades, enter trades, and capture the rally. All you have to do is work, hard work, make note of all the points which I'm teaching in the classes, in the session, learning sessions. Okay, practice them, implement them, and see how you get your results. This is what research is all about. This is basic research. Okay, there are more advanced. I'm not going into that complications, but this is a basic approach what you need to have as a trader. Clear, guys? I've given you enough examples for you to understand how to identify buy zones, sell zones, the importance and effectiveness of moving averages, and the concept of the lows getting shifted higher and the lows getting shifted lower on a sell trade to trail your positions for bigger profits. See, even in this trade, you can see the low has got shifted higher, low has got shifted higher. This is a good move. Again, lows are higher itself, higher, 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 higher. See, as long as the lows keep shifting higher and higher, you can keep holding them for next day profits. Take every single day. Take it day by day. Unless you see any reversal, okay? When you're taking a buy trade and suppose you are sitting on profits here. If next day you get a strong bearish candle and knocks off the low of the previous green candle, then you book your profits. Exit your position with trailing stop loss in profits. Initially, originally, when we enter a trade, our stop loss will be at certain levels. We will keep entry stop loss below our entry candlestick. As the price start moving higher, your stop loss will not be the same. Your stop loss would have shifted higher. This will be your trailing stop loss positions. which we short form call it as TSL. Original stop loss only at entry levels. Once trade has moved into profits, you need to shift your original stop loss to profitable positions and use this trailing stop loss. Okay, so when you're sitting in a profitable position, any bearish candle, if it knocks the low of the previous green candle and closes bearish, then you exit your trade with part profit. You may not capture a big profit, but you're capturing 50% profit. That's also good. Profits is what we need. Few trade we may get medium profit, few trade we may get bigger profits. Overall, if you are consistent in your approach, net to net, you will be a very, very profitable trader. Okay, guys. So these are basic concepts in which we will start our swing trading journey. These are simple methods, swing trading. Okay. People who are very serious of becoming intraday traders, you can look at enrolling for our intraday mastermind course, where we teach very advanced concepts of trading. They're very advanced but very effective and simple to understand. Okay, those who want to trade in index every day, you want to take trading as your profession, you want to take trading as your career, you want to become professional traders, so you can definitely look at enrolling to our intraday mastermind course, where we train students on our unique proprietary trading systems, where you will be able to take your nifty bank nifty trades on a regular basis by yourself. Okay, our idea is to make you all become independent traders. So having knowledge of intraday will also make you take more trade. Frequency of trades will increase if you have more intraday knowledge. Okay, so however, few of the methods of intraday trading and live market validation I am going to teach you in this course in my next video. Okay, my next video will I'll be covering about live market validation and trade entries with all the trade concepts, with help of certain easy trading tools and indicators of woodies and pivots. So we'll be talking about woodies and pivots trading methods for intraday entries, live market entries, and profit booking, with all the strategies what we can have, which I'm going to cover in my next learning video. Okay, so catch you again in my next video to teach you about woodies and pivots trading concepts. Okay, till then, see you. Take care.